Good afternoon, traders. This is Christian from Hertz Trade Group, and this is your end of day as well as your end of week market recap, where I will go over all the major themes of the week, what was performing well, what was not, and some as well as some trades as well that we got involved in this week, and also a little bit about the month as well. So just very quickly, risk disclaimer in front of, or should be in front of you. Everything that we're going through is for information purposes only. Not giving out any advice or recommendations. Please follow the risk disclaimer or read the whole risk disclaimer right there. Just one quick announcement. If you are looking to be a member of the Tribeca Trade Group, you can get a half off your first month as a member. I think it's a great way to kind of check out what we do. We are, I'm trying to provide basically as much value add to members as possible. What I do at the end of the day, if you notice, I'm not doing public videos every day of the week. Instead, what I'm doing is member videos where, going through basically detailed watch list and all open positions, as well as, as I'm adjusting those positions, why I'm adding to them or why I may be taking them off, why I'm taking targets. So just a lot more hand holding in terms of, just daily flow in terms of, what's in my portfolio and why it's in there, and the goal of what some of the trades are as well. So TribecaTradeGroup.com, go to services and products, and the coupon code is TTG new. I believe that has to be in all caps, but look forward to seeing you guys in the trading room. I hope that you check it out. Let's talk about today's performance first. I mean, it was basically a snoozer of a day in terms of Friday, but I think overall, I think a pretty positive week, right? And just with the understanding that like not every day is going to be a great trading environment. Today the market gapped up a little bit, was pretty strong going into the open in the first half hour of the day. Listen, these gap ups, we've talked a lot about them this year. They are really great for taking profits in the beginning of the day and then kind of sitting back and see what the market does. Or if it's a Friday, just going out and, spending some time away from the screens. Again, it's all about what the market is giving you, rather than like what you want to get out of the day. It's very important to understand that. And after all, like we've given plenty of examples of this, but the after hours is where all the money is made, right? Buying the close and selling the open is such more lucrative than doing it the other way around. I know that, many people want to be active during the day, but it's really like that's some of the best things that you could do is basically have some swing trades on, take them off in the first half hour of the day, and then, assess as you go along. But it's not to say that you're not going to find a trending day. Those do happen as well, but they're few and far between. You're just not going to see very many trending days, right? Especially in this environment too, right? Which kind of just leads us to the backdrop and, what we have next week too, right? So next week, we're going to have, I'm just going to walk through this really quickly. So just, see if follow along here, my thought process for a second. But, why? So first of all, that's been the relationship, like, as long as I've been a trader, right? And further, like if you go back and you look at 30 years and you Google that, where's the money being made? It's always made in the after hours market. It's always made buying the close and selling the open, right? Even more so when you look at the environment that we're in, where interest rates are around 5%, right? And we know that the big question, and there was like 5 Fed speakers today telling you, similar things, why they can't cut interest rates or how long it's going to be or what they think. But it's because of inflation is too high, which brings us to the data point, and it's going to be talked about a lot next week. We're going to get both the PPI. It is odd. I don't have the reason for this. The PPI is actually before the producer price index is before the CPI. And so the one thing that's not bad, I would say, going into this is they're expecting a pretty high number. Right. So somebody, when they come up with the estimates, whoever that is, um, and of course you could dig into that on your own time, but they've estimated that the number is going to be zero point 0.4, right? So that's a pretty decent number. Like, and if you, uh, And if you annualize that, that's 3.6%. So, that's way above. If the number comes in line, that is still way above the Fed's goal. The Fed's what they're looking for is for 2% annual inflation. So, if this number comes in point 0.2 or point 0.3, the market's probably going to like it decently. And it's much better when the estimates it's just an easy, it's the, makes me think of the saying, overpromise and underdeliver, right? So they are looking for a high number. This is much better than if the number was estimated to be point 0.2 and it comes in point 0.3. So point 0.3 and the estimates are point 0.4, the market actually might take that in stride. All right. So that's what we have next week. Again, I'm spending a little bit more time here because the market does pay attention to the CPI, even though the Fed actually pays more attention to the PCE deflator, which we got. I think that was what 2 weeks ago. So that's what we have on tap. And again, this is why you're not getting that many trending days in the market. It's just harder to do it when you've got rates as high as they are. That's my opinion. But nevertheless, so what has been working is that situation of having swing trades on and selling into the open. And again, it's not every day, but it's that significant as it was today, but certainly, and small caps were under pressure today. They were down 1%. So, that's the way small caps have been going. I was talking about this earlier. I guess we can kind of start with this chart, but just when you think, as I started to kind of look at the small caps the other day, and here's the weekly chart, by the way, but I started to look at small caps yesterday and say, hey, we're getting pretty close to these previous highs. We've managed to kind of get back. There's a little bit of a rejection here at that VPOC that was taken out earlier in the week. We came back in and price tested the top of value, nice bounce, but again, just no follow through. And that's what small caps have been doing. They've just been exploring the range, right? They have not, and if I would classify this as a trend, it would be slightly up to sideways. Right now, on the other hand, we'll go through the rest of the indices really quickly. When we look at the futures, I don't need this. Let's bring up S&P futures, right? I mean, we've made a really nice move here from the lows, and the bullish 80% rule, it remains in effect for the daily chart. We're only about 1% away from the top of value, and that's resistance, right? And that 80% rule will complete. I can't tell you really what happens once we get there. We could digest. We certainly have been doing that along the way. We've had this nice move so far in May, but we've also had a couple days where we're just backing and filling, really textbook, I would say, right? So to have this nice move, then we get above the 50-day moving average and we kind of hang out a little bit, and then we start to move higher. So today was a doji. We've had one of these 2 days ago in S&P futures. It's not really that big of a deal. You just kind of have to curb your enthusiasm about this market and really be careful about how you're trading it, and that really goes into whether or not you're making money in this market or having a more difficult time. Looking at just the 1 hour chart, I think this also is kind of interesting to note. One of my questions for the week was, would we take out this virgin point of control? Again, this is, if you're not familiar with the virgin point of controls, they're where a lot of buyers and sellers previously met up, but we haven't revisited. So they often act as overhead supply. Price is drawn to these, a lot of the time. And so notice that we got here, we try to get a little bit above, and we're just kind of hanging out, right? So it is what it is. I think was perfectly like something that we spelled out this week that could happen. That number one, that the VPOC would be taken out, and that we would also kind of hang out there, right? Which brings me up to looking at the Qs. They did the same thing, right? The Qs, basically, we took this out in the beginning of the week. We tried to go a little bit higher. Price didn't want to do that. Didn't want to break lower. Went sideways for the week and ended up a little bit higher than that. All right, so that's what we've got in terms of the indices. There's nothing really wrong, in terms of like what the price action did today. We're still, managing uptrends. We still have the bullish 80% rule in effect for both the Qs and the S&P. Again, doesn't mean that it goes there in a straight line, but so far I think this is playing out. And that is about 1.1% the resistance. But mind you, we're right back into this, into this range that we were in for a good portion of like a month and a half, which was all in here. All right, just looking at the Dow, right, and the Dow had a pretty good week this week. I think the Dow was up about 2% for the week, right? And this also, made it above the value area and is trending. Did not make new highs, but I do find it interesting that European stocks did, right? So here's EZU, right? And if you look at the weekly chart of European stocks, yeah, they're out to new highs. So yes, new highs. It's not all about the US. European stocks are making new highs, and the China group really has been doing well too the last couple of weeks. I mentioned this chart. That's not the right chart, so bear with me. Here's the Chinese Internet ETF, right? We had 2 huge weeks, right? And then this week we held where we needed to. A little bit of a pullback in the beginning of the week, but buyers kind of stepped in here and we're holding above the breakout area, 2967, right? That yellow box is the value area for this year. It's based on all of the volume at price from last year, and it's significant, and we're above there. So, I do have a position in the Chinese Internet ETF, and it's in my in our TTG trend portfolio, right? Which acts like an ETF does. So there's about 50 names in that portfolio. It just doesn't trade on an exchange, so it's not exchange traded, but it is a portfolio, and I manage it very similar to how someone would manage an ETF. All right, so that looks good in my opinion, and we'll continue to kind of watch that. And I'm also long PDD. All right, let's just get back to the performance for the day. There wasn't a lot of things that went up, but the semiconductors kind of held in there, and they were up 1.5%. Let's take a look at that chart next, right? Because that gets a lot of attention, right? I know Nvidia and the semiconductors. There's a lot of people looking at this. I think this looks okay. We're not at new highs, but we held where we needed to. Even though the semiconductor ETF back in here, where we had this big red candle, we had just an inside candle, but we're trying to resolve above that, right? We're very close to taking out that red candle. We're not quite there, but I think, pretty interesting. And zooming in here a little bit, watch this 227.57 level. That's about 1.9% above, and there's also the 80% bullish rule. All right, let's talk about what performed well for this week, right? And then we could talk a little bit about what's performing well for the month. But I actually added the shippers ETF in here. Really has not gotten much attention, right? I know the utilities, right? Everybody's been talking about the utilities. I'll bring up that chart, and let's talk about the utilities, and then we'll talk about the shippers in a couple other areas. But yes, I'm going to say it right now. I think that the top, or at least I shouldn't really I don't call tops, right? It's not something that I really do, but I think this has kind of run its course. For now, this is the utility ETF, right? We could look at this on the terms of the weekly chart as well as the daily chart. Notice that you've got a VPOC being taken out here. So I think that this is extended. Again, I'm not calling the top. That's not what I do. But I think that this is due for some digestion, right? And you may see that coming with that VPOC being taken out. Again, price can sometimes go a little bit further than it, but I think that this is going to hang around this virgin point of control. All right, that's a little bit of a prediction for you. Just thinking that we get some consolidation, because that's a big area that we've taken out, and that goes all the way back into here. Again, that's a virgin point of control where price did not pass through this value area at all. So that's why I think that I would not be going along the utilities here. All right, I mentioned the shippers, right? How they've not getting much attention, but they have been one hell of a group. Look at this. So again, like there's a lot of international in this ETF. You could also look at boat. They also, that's the reason why it's gappy like that, is because there's a lot of markets that are in this ETF that There's a lot of stocks in this ETF that are international, so they're open while the US market is closed. And then all of a sudden, like once our market's open, the ETF has to adjust to where those international markets are. So again, would I go long this group here now? No. But I mean, this group has been on absolute fire, and it's not getting the attention that it should. And you could go through some of these names. STNG had really good earnings. We talked about this name earlier this week in some videos, some member videos. Nice breakout. I did add this into the TTG trend portfolio. Follow. This is the first day of the breakout right before earnings, and then follow through. And Zim is another name that's been moving through and actually went all the way through its value area just basically in 2 weeks. Really impressive performance. Again, I would not be going long this name here. I would be taking profits. But I do like the STNG versus this. And then there's a bunch of we could spend another 5-10 minutes going through these charts, but there's a lot of strength in the shipping companies right now. That was actually your best performing group. And I know I'm going a little bit in the weeds here in terms of smaller groups, but also the gold miners. Gold had a very good week. This was kind of just consolidating, and the price action was getting fairly tight in here. So a nice move. This is also bullish 80% rule. You can kind of see this theme being played out in a lot of different groups, this bullish 80% rule. Further down on the list, financials. When we look at the performance for the week, and I do have a spreadsheet for that, look at the blue column is what's highlighted for month to date so far in the month of May. We're a couple weeks in now, and the shippers are up there. China, which we already talked about. The banks have been really, really nice performance. And that goes with the value trade, which has been outperforming. Utilities are right there too. Gold miners, biotech. So again, some of these are not your most exciting areas of the market, right? But it is what it is. Our job is not to sit in positions that aren't working. It's to adjust what the market is giving us and take advantage of it and try to make money in it. So sometimes you're just not going to get the most popular areas that you want to that are in the market that are going to be your best performing areas. So this is what we have right now in this market. And by the way, tech semis, which I already went over those, but tech is not having a bad month. It's up 4.7%, right? That's not bad considering that the SPY, do I have month to date? I think SPY is up about 3.8%. So slight outperformance there in tech. Also, the home builders are having a good month, up 4.6%. Here's the semis down here, down 4.3%. Underperformers, just looking at and by the way, materials, right? That's another chart that we thought looks pretty good. They performed up 2.6% for the week. So again, a good amount of groups that were up over 2% this week. On the downside, what can you say about these clean energy stocks? They continue to trend down. Biotech did not have a great week after I think they were strong the previous week. But again, going through some individual names, you can find some strength. Again, you just kind of have to look hard. China, as we mentioned, was down for the week, but held where it needed to. Consumer discretionary was essentially flat for the week. I've got the performers mixed up. So for international, so I will redo that and have that. All right, there we go. That has been that has been fixed for you. But I did want to emphasize that look at how many European countries were up over 3% this week. You've got Germany, Switzerland, Sweden, uh, uh, France, Italy. So a lot of good nice strength there. Germany was up 4% for the week. So very strong in European markets. All right, guys, that is it for the end of week note. Again, I think it's all about right now, being efficient with your trading. It's only the 10th of the month. I've had a pretty darn good month. I did not have a good month last month in April, but as I've said before, sometimes when I have these when I have a bad month here or there, it really gets me dialed in, and I really kind of tighten the screws on being a disciplined trader. And I've recouped all of that bad month, losses, and then some. So I'm happy that I've gotten kind of refocused on what I need to be, and exploiting areas that are trending, and look to do that. And I'm excited for the rest of this month. Guys, have a great weekend, and hope to see you on Monday.